Evan, kick us off by talking a little bit about Amazon going through another round of layoffs, and we'll talk a little bit about the dynamic of unemployment, especially as it pertains to big tech.
Yeah. So Amazon is announcing that they're planning on basically letting 18,000 roles go. So that's a lot of jobs very quickly. To put this in perspective, we'll show you a chart of their employee growth over time. They've crossed over 1 million employees over the last several years, which is a crazy number. But basically what we're seeing here is the business grew too fast over COVID. They thought that the numbers that they were seeing as far as e-commerce, online orders during COVID would sustain itself, but it didn't. And so that's something that Amazon is now having to address. They overhired. They need to focus on profitability as capital gets more expensive. And so they're having to slash a lot of jobs. This is in the same day, actually, as Salesforce announced they're laying off 10% of their workforce, which is a substantial amount for them as well. And basically what we're seeing here again is capital is getting more expensive. You can't just grow. You got to show profits. So we're kind of seeing a reorientation of businesses around what their expense lines are and where they're spending money.
Yeah, I think this is a story to continue following as we kind of head into what many are saying is going to be a recession here. Like you said it there, what essentially happened is capital became free and growth at all costs was essentially prioritized, and that just meant bringing on as many people as you could, and you can kind of see that in this exponential growth curve. So along with Salesforce, we wanted to talk just about the current unemployment situation that came out in December of 2022 as well. So looks like the unemployment rate edged down to 3.5%, and that is directly from the U.S. Bureau of Labor Statistics reported here not too long ago as well. So what does this kind of tell you about the trend of where the job market is heading currently?
I mean, the job market's actually really healthy. It's considered healthy in between 3 and 5%. And so we're right in that range. It's 3.5%. It's pretty healthy. That's one of the confusing parts about our economy right now is, we're clearly in a recession, but the unemployment and kind of employment data is either lagging or it's just going to continue to stay strong. We'll see what happens. I would imagine that there's going to be higher unemployment as time goes on, but the job market has been extremely healthy for a long time after COVID, of course. We had a really strong ramp after COVID. There's a lot of speculation that, after COVID, a lot of people just didn't go back to work, and so that's affecting the numbers. So we could be seeing some of that, but based on how the U.S. tracks unemployment, right now we are seeing, normal, pretty healthy numbers as it pertains to like an average economy that, we strive to aim for, where there's, low inflation, but there's high inflation, and a lot of that is, again, due to what happened during COVID. So that's kind of the overview of, unemployment and what's going on. The tech sector, as we're seeing with Amazon and Salesforce here, got hit really hard. That's just because that's where a lot of the capital was flowing into the market, was into the tech sector, because margins are very high. There's a lot of upside, and there's really just an opportunity to invest and get a direct return on your investment. It was very clear in the tech sector that you can invest and have very clear cost of acquisition with a lot of companies, but that cost of acquisition for many of them was actually unsustainable. So we're starting to see a pullback there. It's just kind of the nature of tech that it kind of draws a lot of capital just because of that high margin environment that I mentioned. So we're seeing a correction here. And Twitter is a great example of this. Twitter laid off or voluntarily lost employees to the point that 75% of them left the business. This was a lot of the controversy over the recent stint of Elon taking over as CEO and buying the company. A lot of people were upset about how so many people were laid off or left the business very quickly, but we're seeing that Twitter is operating just fine. Advertisers are a little spooked, but as far as the operation of the technology goes, it's working fine. So that's kind of to the point of margins and being able to leverage technology to build an efficient company. That's why it attracts so much capital.
Yeah. One last thing I'll say about this. I think it's just interesting when you take a macro view of it and you start viewing how everything is so connected to each other. So it's like, COVID hits, the federal government has to essentially make capital as cheap as possible to keep the economy running. That leads into massive hiring, trying to continue growth for these big tech companies. And then when everything kind of comes back to reality, we see the effects of that. We see all these companies start to cut these employees, which in some ways is probably having some of these riffs on employees, cutting headcount is likely a good, healthy thing for those businesses in a lot of cases.